I definitely do not recommend filing your taxes yourself. I always recommend hiring a CPA or accountant, and they can help you file your taxes for you. That's what I do every single year. Hey guys, it's Andy Coleman, and here are the top 19 tax write-offs if you're a realtor. So I know taxes can be pretty brutal at the end of the year. You might make $100, $200, $300, $500,000, maybe even a little bit more, and you're gonna owe the IRS a lot of money. Fortunately, as an independent contractor, or if you have your own LLC or something like that, then you can actually write off a ton of different expenses. If you're an independent contractor or you have your own company, then you have a lot of different write-offs that you can use at the end of the year to save a tremendous amount of money on your taxes. Number one, this is gonna be your real estate brokerage fees. So it doesn't matter what company you're with, you probably have desk fees and you probably have different fees that you have to pay to your brokerage. If you're with eXp Realty, for example, we pay $85 per month, and that just gets deducted every single month. So it's about $950 for the entire year. So that's one thing you can write off. Some people might have different write-offs for their brokerages, but for eXp, that's really all that they're charging you. So that's all you get to deduct for eXp's write-offs. Number two, this is gonna be a massive one and something that a lot of people probably don't know about. So you have a couple different options in this category, but it's gonna be for your investment retirement accounts. One of them, which is my favorite, is the SEP, which is the SEP IRA. This is massive because you get to deduct up to $61,000 or 25% of your net income, whichever one's actually gonna be lower. So I'll give you an example. You can't do $61,000 in a SEP IRA if you're making only $100K a year. Then you would only be able to do 25% of that, which is only $25,000. And that's still a tremendous amount of money. That's what you can do as option number one for your retirement account. Or you can do a 401k, or you can do a Roth IRA or some other kind of IRA if you want to go that route. Either way, you can do an investment account. I personally choose the SEP IRA because that has the biggest tax write-off. Number three, this is gonna be real estate. If you invest in real estate, you can write off a massive portion of your investments, whether it's your insurance, your taxes, your depreciating value of your home, your expenses for services and repairs. If you have a tenant in there and you're not actually charging them rent, you could write off that monthly payment. I mean, there is a tremendous amount that you could write off if you're investing in properties, especially the down payment for the house. Investing in properties is a massive write-off, probably one of the biggest write-offs that you can possibly do with your money to save a lot at the end of the year when taxes are due. Number four, this is gonna be your vehicle expenses. So one of the ways is your gas and your mileage and the services that you're gonna use for your car. At the beginning of 2022, it was 58.5 cents that the IRS would give you every mile that you drive. It actually went up after the first 6 months to 62.5 cents. And then next year, it's going to go up another 3 cents to 65.5 cents. Let's keep this simple, okay? Let's say you're driving 10,000 miles in the year. You can multiply 62.5 cents times 10,000 miles, and then you can actually write off around $6,250. And then you can also write off your gas as well. As long as it's for business, if you're in real estate, obviously, then you could write it off for any kind of showings that you're doing, listing appointments, walkthroughs, inspections, any kind of thing that you're going to be doing. And then obviously, if you have to get service on your car, let's say you need new tires or your oil changed or anything like that, you could actually write those expenses off if you're using that solely for business, of course. And then another method is going to be the first year depreciation method. If you're like me and you buy a new car every single year, you can write off up to $19,200 if your car is valuable enough to actually qualify for that first year depreciation. But yeah, if you get a car or a truck, an SUV, something like that that's over 6,000 pounds, you can actually write off a substantially higher amount on that as well. Number five, this is going to be a big one as well. This is going to be for an at-home office. So you're allowed to write off a certain portion of your at-home office. So let's just say hypothetically that your rent payment is $2,000 per month. You get to write off about 20% of that. Obviously, this is going to be different per person. You can deduct things like utilities, like your electric bill and your water bill and anything else that goes into your at-home office. Number 6 is going to be business dinners. If you're like me and you go out to dinner a lot and you talk business, technically, according to the IRS, you're allowed to write that off. If you're going out to dinner a couple times a week, entertaining clients, you're flying in clients, whatever you're doing, you can write all of that off, which is fantastic because if you go out a lot, that can be a massive write-off that you can use at the end of the year. Number 7 is going to be cell phone bills. So if you're in real estate, you're going to be using your phone 24/7 for business. You could have a second line. So if you don't want to mix your personal line with your business line, you can have a business line for a cell phone. So you can write off the actual cell phone purchase and you can write off the monthly subscription plan for your cell phone as well. Number 8 is going to be traveling expenses. So if you're traveling for business, if it's real estate related, you could write off all of those expenses if it's actually real estate or business related. So let's say you're going to a conference for your company. Let's say you're in eXp Realty. We have 2 conferences every single year. We have eXpCon in Vegas and we have the shareholders event in Orlando. So if you're flying to those conferences, you can write off hotels, airplane tickets, Ubers, anything that's related to the actual travel expense to whatever kind of event or real estate related thing that you're going for, you could actually write that off every single year, which ends up being a decent amount of money. If you go to, let's say, Vegas and you're in Florida like I am right now, you're spending like $500-600 on a round trip plane ticket. Number 9 is going to be marketing and advertising expenses. So for marketing and advertising, it could be anything that you think of. So if you're doing, let's say, some kind of advertising as a premier agent on Zillow or realtor.com and you're spending thousands of dollars per month, you can write all of that off. If you're doing monthly mailers or weekly mailers or whatever kind of mailers that you're doing, you can actually write that off as well. Whatever kind of marketing expenses that you use, you can write all of that off for your real estate business. Number 10 is going to be events that you attend that's real estate related. So say you're going to some kind of conference or seminar and you have to purchase tickets for that conference or seminar. You could actually write that off. So if you're traveling or going to events, you could write off the ticket purchases as well. If you're going to educational events where you're learning something for business or networking events where you're trying to connect for your business, then you can write those expenses off as well. Number 11 is going to be equipment and supplies that you buy. So I'm not going to list all of them. There's a lot to list, obviously, because you can get really creative with this one. So if it has anything to do with your real estate business at all, and it's any kind of supply or equipment that you buy, you can write it off. So let's say you're filming videos for social media, trying to advertise properties or trying to recruit agents. Whatever you're doing, you could write off your camera expenses and your audio and lighting equipment. Whatever you can possibly think of that you're using for your real estate business, as long as it's a legitimate office supply, you can actually write that off as well. If you're buying a lot of different equipment, that also will include your open house signs and your business cards. Anything that you can think of, you can write that off. And number 12 is going to be monthly subscription services. This as well can be anything that you can think of that would have to do with a monthly subscription service. So if you're like me and you use Canva, which is the platform that you can like Photoshop different graphics and images for social media or for marketing and advertising. If you have, let's say, Microsoft Office, that costs me like $15 a month. For my Google service where I store all of my files as backups, you can write that off. Like there's so many different subscription and services that you can write off. If you're using any kind of premium service for whatever kind of marketing or advertising that you're using, you can write off that monthly expense. If it's business related and it's a monthly subscription, you can actually write that off. And number 13 is going to be services. If you're using a service like a CPA to file your taxes, or if you have a monthly accountant that you're using and they give you financial advice or they give you different tax advice, you can use that as well. Some people spend about $250-300 per month to have a CPA that actually gives them advice every single month. Maybe they get set up on payroll and they actually are saving money on payroll that way. Or whatever you're going to be using for your services, you can use all of those write-offs if you're using those services for your real estate business. And number 14 is going to be your MLS dues and your super dues. Whatever kind of dues and fees that you have to pay as a realtor, you can also write those off. For me here in South Florida, I have what's called Flex MLS, and my Flex MLS fees are about $900 per year. So I get to write all of that off. I have my super fees, which is that electronic lockbox. So I get to write those fees off as well. Any kind of real estate related fee that you can think of, you can write that off too. So if you're taking classes and you have to pay for MLS classes or whatever kind of services that you're going to be using for real estate related purposes, you can also write those off as well every single year. And that can get very expensive because you also have things like license renewal fees as well. As a realtor, we have to renew our license every so often. So you can also use that as a tax write-off. Number 15, this is an interesting one. This is actually clothing. So you have to be very, very, very careful with this one. You cannot write off any old ordinary clothing. If let's say you buy a suit for a business meeting, technically it's my understanding that you cannot write that off. It has to actually be branded clothing. It has to be clothing that you can't use for day-to-day stuff. So if you buy, let's say, a suit that you're going to use for a business meeting, and you can also use that to go out, on a date or out to dinner with friends or for like a wedding or something, you can't do that as a tax write-off. It has to be specifically branded clothing. So if you have an LLC, as long as you brand the clothing and get it specifically made for your LLC or business, or like me, if you're with eXp Realty, if I get eXp Realty related clothing or shoes or hats or merchandise, whatever I want to do, as long as it's actually branded for my business, then you're allowed to deduct it. Number 16 is going to be closing gifts. So let's say you have a buyer that just bought a house and you want to gift them a bottle of wine or a gift card or whatever you want to gift them, you could actually write that off because that's a real estate related gift that you're giving to your client. Number 17 is going to be hiring people to help with your real estate business. So if you hire a virtual assistant or a regular assistant, you can write off that expense. It can get very costly as well. So for me, I spend about $800 a month on my virtual assistant, so I get to write off that entire expense. And that's only part-time. So if you have a full-time assistant, you can be talking thousands of dollars per month. Any kind of people that you're hiring for your real estate business, you can write all of that off. Number 18, that's going to be donations. You can go to Goodwill every single year. I believe it's around $500 per year. You can donate furniture, clothing, any kind of thing that you can donate to Goodwill up to a certain amount. Or if you have friends that have charities and you're donating money to those charities, you can actually write that off as well. Just be careful and make sure you're actually doing a charitable donation. And lastly, number 19 is going to be health insurance. You're actually allowed to deduct your health insurance every single year. So as an independent contractor, or if you own your own LLC, you can't actually get health insurance from your company. For me personally, I think I spend about $200 per month on health insurance, so I'm allowed to deduct that entire $200 per month for the entire year. That was basically all the deductions that I use every single year. I might be forgetting one or two, but that's basically all I do throughout the whole entire year to do all of my tax deductions. Now, doing this, I have about a 17% effective tax rate. So if you're working a normal job and let's say you're making about $200,000 per year, obviously you're going to be in different tax brackets. Every single tax bracket is going to be different. Like your first $35,000 is going to be taxed at a different tax rate than, let's say, your last 150 up to $200,000. That extra 50 grand from 150 to 200, that's going to be counted and taxed at a different tax rate than certain portions leading up to that income. So basically, you're not going to be having the exact same tax rate for every single dollar that you're going to be taxed. It's all going to be different brackets that you're going to get taxed for. That's why you have to get very creative when you're doing your taxes at the end of the year to make sure you're getting all your deductions done correctly and legally. Make sure everything is by the books. Make sure you have all of your tax records, all of your receipts saved up, and make sure you're doing everything correctly. So using all these kind of tax write-offs and deductions, you can save yourself a ton of money throughout the year, which you can deduct off your income, and then you're going to pay less taxes at the end of the year. I definitely do not recommend filing your taxes yourself. I always recommend hiring a CPA or accountant, and they can help you file your taxes for you. Doing this and doing all of these methods, I actually got my effective tax rate down to around 17% for the year, which is really not bad. So another thing I forgot to mention, if you have an LLC, you can actually put yourself as an employee and you can pay yourself a salary and you can actually deduct that as well. Thank you guys so much for watching. I really hope you enjoyed this video. That's everything I do for my tax deductions and my tax write-offs. I hope you found this very informative and I hope this can actually be put to good use for you. If you liked the video, hit the like button, hit the subscribe button, hit the bell icon for notifications, and I'll catch everybody in the next one. All right, that was pretty good. Okay.